Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code from the Forex Super Model, and we're going to be looking at make more Forex profits from your watch lists. Now, most people trading Forex or stocks or whatever use some form of watch list, which is basically a saved area in on your platform where you save certain financial instruments. Now, most of you will probably be just using watch lists in a fairly haphazard way, throwing things in as you want to make a short list, etc. And we believe that there's tremendous benefits to be gained from quite a structured view in looking at watch lists. So let's make a start then. So the first thing to realize is to get some sort of structure. You need a hierarchy, and if we're talking Forex, the general hierarchy we use is dollar, euro, yen, pound, CAD, AUD, NZD and Swiss franc. So you can argue the toss about whether that's the correct hierarchy, but that's the hierarchy we use. So we have some sort of priority, if you like. So dollar prioritizes everything else mostly, and then euro and so forth, generally related to our view of the size of the markets. Now, as I said, you can argue that, but that's up to you. Right. So the thing to do then is to get watch lists working for you in such a way that they maximize your profits and that you can actually trade in a very efficient manner and get a very good extra information from watch lists that you previously would all be muddled up. Excuse me. Right, so let's make a start then. So watch list, a good place to start, watch list 1, and your watch lists are going to have, normally your Forex watch lists are going to have seven pairs in them, and we'll talk about some the remainder at the end of it. So watch list 1 then, the best place to start watch list 1 is to use all the euro pairs, and we'll talk about that. So euro dollar, euro yen, euro pound, euro CAD, euro AUD, euro NZD and euro Swiss franc. Excuse me again. Right, so the thing to note, the reason we start here is because there are certain FX complexes which are made up of the pairs, which lend themselves to certain situations in watch lists. Now, the euro is the starting point. Now, the first thing to realise is you can see here that we've got them in our ranking order: dollar, yen, pound, CAD, AUD, NZD. So obviously, because we're talking about the euro pairs, the euro's missing in that sense. But anyway, and the next thing to realise is that the euro starts off the pair right the way down. So it's euro against something. Every pair is euro dollar, euro yen, etc. Now the beauty of this is that when you go onto your watch list, you can immediately see what's happening to the whole euro complex. If all these figures are positive, so euro dollar is on the up, euro yen, etc., then you know that the euro complex as a whole is in play on the up. If all these figures are negative, the opposite. If they're mixed, then you know the market is in a mixed situation. So that's the first thing. Good start. So let's watch list 2. Now, the watch list 2 is the yen. Okay, so we've got dollar yen, euro yen, pound yen, CAD yen, AUD yen, NZD yen, and Swiss franc yen. Now again, we're in our hierarchy of ranking order. So we've got a structure to this watch list, watch list 2. But this time, all the pairs are back end pairs, if you like, and the yen is on the back end. So when you go on to watch list 2, you can immediately see if everything's positive. So dollar yen is up, euro yen is up, etc. You know that the yen is weak or soft, the yen complex as a whole. If everything's negative, you know that the yen's coming up, and all this sort of links into other things like risk on, risk off, etc. So just with those two watch lists, if you just literally flash in between them, within 10 or 15 seconds, you've got a massive edge on the market in terms of what it's doing and where it is. So that's the first two we would recommend. Watch list 1 and watch list 2. So let's just get rid of this. Now we then move into the situation where the pairs, you could read those straight. The next two watch list 3 and watch list 4, you have to just you can read them straight apart from the top one. So here we go then. So it's the euro pound. So we're looking at the pound basically in this watch list. So it's the euro pound, pound dollar, where are we? Pound yen, pound CAD, pound AUD, pound NZD, pound Swiss franc. So when you're looking at watch list 3, which is basically the pound, you can nearly read it straight apart from the euro pound. So again, same principle applies. We've got this hierarchy running down, and if you just ignore the top one, the euro pound, you can read the pound straight. So if the pound pairs are below this first one, if they're positive, then you know the pound's on the up. If they're negative, the pound's complex is down as a whole. And remember, markets, when they go into full complex moves, something quite good's happening in the market from a trading perspective, because market participants are focusing on a particular complex for whatever reason. So that's watch list 3. Watch list 4 then. So we've got right. So watch list 4 we're going to have is the Swiss franc yen. And then we've got we're up and running on the Swiss franc. So it's dollar, dollar Swiss, euro Swiss, pound Swiss, CAD Swiss, AUD Swiss, 1 2 3 4 1 2 3 4 5, NZD Swiss, 3 4 5 6 7. So there we are. Now likewise, the Swiss, the only one that spoils the party is the Swiss yen. So watch list 3 and 4, you just need to ignore the top one, so your eyes can immediately go to the Swiss, and this is a back end watch list, rather like the yen was. So you've got you can, if these pairs are positive, you know that the Swiss franc is weak and on the down. If these pairs are all negative, you know the Swiss franc is being bid, and if they're mixed, they're mixed. Right, so that's watch list 3 and 4. So let's move on then. Right, so watch list 5 and 6. Watch list 5 then. Right, so we've got the CAD yen, CAD Swiss franc, and then we're up and running. So it's dollar CAD, Euro CAD, AUD, pound CAD, AUD CAD, NZD, NZD CAD. Now this time, watch list 5 and 6, we need to momentarily ignore the top 2 pairs, which are the CAD yen and the CAD chuff in this case, Swiss franc, and then we've got, sorry, it's the other side. We've got we can read these 5 pairs straight. So if all these 5 pairs are positive, we know the CAD's weak, and if all these 5 pairs are negative, we know the CAD's strong. So moving on then to watch list 6. Watch list 6, we've just done the CAD, so we're on the AUD. So Euro AUD, pound AUD. Right, and now we're up and running. So it's AUD dollar, AUD yen, AUD CAD, AUD CAD, AUD NZD, and AUD Swiss franc. Now, in this situation, we've got, you ignore the top 2 on watch list 4, 5 and 6, sorry, and you're front ending it in this case, the AUD's on the front. So if all these 5 pairs are positive, the AUD's on the up, and if they're negative, the AUD's on the down. Again, if you want to know about transmissions, we've done videos on transmissions, but suffice it to say, you get a very quick picture of going on. So CAD is often linked with the oil market, AUD is often linked with risk on, risk off commodities, etc. So anyway, right, so that's watch list 5 and 6. So we're nearly there on the Forex, and we've just got to sweep up a little bit more on something else. So watch list 7. Right, watch list 7. We've just done, so we've got the Euro NZD, pound NZD, AUD NZD, and then we're up and running. So it's NZD dollar, NZD yen, right, NZD CAD, and NZD Swiss franc. So we're looking at this sort of situation. On watch list 7, you've got to ignore the first 3, or you can say I'll look at the first 3 in the opposite way. So you've got, because we're getting near the halfway mark. So that's the same principle there. So finally on the Forex side of things, it's watch list 8. So we've got, which is the dollar. So we've got dollar yen, pound CAD, dollar CAD, sorry, dollar Swiss franc, and then euro dollar, pound dollar, AUD dollar, and finally NZD dollar. So the dollar's on this side here, and the dollar's on this side in these three. So the same principles apply. Just it's slightly more messed up because we've got 3 pairs running against 4 in watch list 7 and 8. So right, so let's get rid of that then. So that's the initial point on getting your act together on watch lists. Is you need a hierarchy and you need a structure. So we've got that there. Right, now we're going to sweep up the other bit. Right, so the Forex market doesn't operate in isolation. It operates as part of major asset classes, equities, bonds, commodities, etc. So we need a watch list which sweeps all that up. So watch list 9, watch list 9, and this is the final watch list of this particular approach. So a good place to start is to stick in the US dollar index. Which is a weighted measure of the dollar against 6 other currencies. If you need to look that up, then there's plenty of information about the dollar index. But about half of the dollar index is against the euro, and then it drops down, so it's euro, yen, pound, CAD, etc. Right. So you've got stick the dollar index at the top of watch list 9, and then you need to think about. There's quite often quite a strong link between dollar strength or weakness and gold. So gold's always a nice one to stick in there. People love trading gold. They love using it as a safe haven, and they love messing about with gold as generally. Traders are very keen on that. So it's gold and oil, US crude quite often. Rather than European oil, so probably talking about US crude. So that's the initial part of watch list 9, and then we're on to the equities part of it. So we've got Wall Street. Depending on your platform as to what they call it, this is really the Dow, and then you've got the NASDAQ, which is quite often on a platform known as tech, and then you've got the S&P 500, quite often that's straight the S&P 500 or the US 500 or whatever. Right, so asset classes, we've got Forex. We've got commodities, gold and oil. We've got equities. Now, why do we bother having all the 3 indexes? Well, because actually you can gain a lot of information from which end is it a general push across the board. So is Wall Street, the NASDAQ and the S&P 500 all moving up or down, or is it an index dependent? For example, tech has sometimes likes to go off on a walk on its own, and this has significance when you're looking at Forex as well. And we can do later videos on the relationships of these things. So the only thing we're missing is the bond market, and so we tend to think the US 10-year. The US 10-year is a good place to get a good overall feel. Normally when yields are rising, so you've got the price of the bond falling or the price of the bond going up, and yields falling. So we can talk about that in other videos, but that's not really what this video is about. This is about getting your act together on watch lists. Right, so watch list 9 really is a version of our global macroeconomic model. Now you can, if you really want to go to town, you can add copper in there because copper is a very volatile, good indicator of risk on, risk off quite often, and in economic growth, and so that links in with quite often AUD and likewise. So and the China story quite often links in with copper. Right. So that's watch list 9. So to sum up then, don't think of watch lists as just somewhere to chuck your things you're interested in. Use it as an aggressive, structured process, and you'll find that you after a few days of getting used to this, you won't even have to look which watch list is what. You'll know automatically that the first 2 watch lists you can read straight. 3 and 4, it's you just ignore the first pair. 5 and 6, ignore the top 2 pairs, and 7 and 8, ignore the top 3 pairs. Then you've got the advantage of very quickly seeing what's going on in the market. Is the market having a real go at a particular complex, or is it mixed? And then have a look at your watch list 9 to get the overall macroeconomic view. The dollar index obviously is a very sort of well, it's a measure which is skewed because of its weightings, but it can give you a sort of quick snapshot of what's happening. But remember, half of the dollar index is the euro, really. And then oil and gold, quite often. So if the dollar is going up, gold quite often doesn't like it, and nor quite sometimes oil doesn't like it, depending on the transmission. So, and then you've got the equities, which are very sensitive to risk on, risk off, and likewise you've got the bond market, which is more problematic but worth a look, and copper will complete the overall picture. So just remember that some of these will drop off your lists. So because of the nature of the 90-day future contracts. So just be aware that the US dollar index, for example, you will need to add it occasionally to your list because it will have dropped off. Likewise with probably copper, but these are just minor issues, and so don't be surprised if you come back 3 months later and your watch list 9 has got some holes in it. With regards to the currencies, they should be there on a daily futures trade, or whatever they want to call it. So I hope that helped, and look out for the next video. Thank you very much.